stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating, educational, financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup of segments to give you all as much information as quickly as possible. And as per usual, we're going to do our live trading and market analysis right here into the open till about 9:45. Then we have stock spotlight. So I've picked out one stock for you guys. I'm going to give you a bull case, bear case, well, mostly a bull case on why I really like this stock. Could be a solid opportunity for you to consider in your own personal portfolio. And finally, the last segment, which if time allows, we'll get into it, options operation, which we're going to get right into the weeds, typically talking about risk management and other things like that. And of course, today it is OPEX. It is Friday. It is a great day, and we're going to do all of our trades live on stream like we always do. Full port, everything, zero DT. That's not happening. It was clickbait. I'm not going to zero DT full port into anything. That's insane. And if you're doing that, you're crazy. But if there are trades to take, we will take them together, and you will see exactly why I'm taking those trades and what to look for when we get into market open. Now, before market opens, I like to go over the catalysts that we have on board for the day. That way you guys are most prepared for the day. You know what to look out for. Now, obviously, as I alluded to before, today is OPEX, so it's options expiration for the month of July. What does this mean for you? Well, possibly higher volatility. There's a lot of options expiring today, and consequently, there happens to be a lot of delta hedging. And delta hedging is the event where market makers have to hedge for these options going in and out of the money. Consequently, it can result in some price swings either up or down, depending on the specific name and the specific OI that's currently open on the chain for that name for those options that are expiring today. So there's certain names we'll go over as we went over yesterday. We'll do it again today. Some of these hotter retail names that we'll talk about and see if there are opportunity to potentially play some of these names today, or just sit back and watch and see what happens. But with that being said, outside of that, today we do have a pretty light news day, all things considered. We have one of my favorite catalyst to play because a lot of people sleep on it for whatever reason, but it's going to be Michigan sentiment. That comes out at 10 a.m. So you want to watch the market specifically at 10 a.m. Michigan sentiment tends to be good for a pop about $1 or so, specifically on IWM. You tend to get a little bit more of a reaction with Michigan sentiment. So that, if you can get a risk-free position prior, something to really consider if you're more of a day trader. You will have that opportunity more than likely, and that's going to be around 10 o'clock this morning. Now, outside of that, it's actually going to be a pretty quiet day. There is Trump is speaking today, which wasn't on my docket earlier this morning, but apparently now he's at a swearing-in ceremony for the IRS today at 2:30. So keep that in the back of your head. Something could happen with that if, again, he tweets, says something, whatever. And then there's a signing ceremony for the Genius Act at, I believe that's 3:30. I'm sorry. The swearing-in is at 1:30. The signing ceremony is at 2:30. So expect a little bit of volatility towards the end of the day as it pertains to any potential news with Trump and what he says and all that jazz. Now, if you came here yesterday or if you missed yesterday's show, I uploaded an excerpt from yesterday's show about the Fed, about Jerome Powell, and about if Trump really can or can't fire him and how that effect, or what the effect could be on the market. If you haven't watched that, hop over to my YouTube channel later. You're going to want to give that a peek. It's only 12 minutes long, but at least give you the education that you need to at least be prepared if something happens and what happens in the event of a sharp interest rate cut. Now, let's get into the market and see what's going on today across the market. But before we do, guys, 8 minutes till market open. Do me a quick favor. If you're watching live, please like and share the stream wherever you are, YouTube, Instagram, X, wherever you may be. I only asked you guys twice on the stream. I know it's a little annoying, but got to help me with the algorithm here. I appreciate all your help and support. I know I'm a very small fish, and I appreciate your eyes and ears on this beautiful Friday. So if you could drop a comment in the chat, subscribe. Once we get over to 500 subscribers on YouTube, I'll be doing this every single day. So if you like the energy, you like the fun, you like the education, go over to YouTube and subscribe right now and help us get to that goal. Now, getting into the market here, SPY made a new all-time high yesterday. That's 628.40, and we're currently gapping over and looking to make another new all-time high today into OPEX, which is very interesting to me. As you saw, if you watched the program yesterday, we took some SPY calls, 626 calls yesterday. Those I ended up closing out around 100% gain, so it was fantastic. So congrats if you were able to catch on to those as well. But SPY was looking pretty good yesterday. We'll see if it can continue the momentum today. You're going to want to watch volume very, very closely. Looking at the Qs, a little bit weaker marginally, but obviously very similar tie here to SPYs. We're looking in the pre-market, very similar charts. And my favorite thing you want to keep an eye on, especially if you've been watching the program, watching IWM. I said ad nauseum over and over and over and over, and I'll continue to say it over and over and over, how important this 223.32 level is on the IWM chart. That is your go line. That is your razor fall line. That is your we're going to heaven or hell line. That is the only line you need on your chart, in my opinion. Above that, we're bullish. Below that, we're bearish. It's that simple. And you can see yesterday, there's 5-minute candles, how important that area was yesterday. It wasn't until the end of the day yesterday we actually tried to get some sort of a sustained push over that line to my next area of my next level of interest at 224.17, which we closed beneath. Now we're gapping above that, which is nice to see. And you're going to want to watch 225.72 as your next level to keep an eye on. If I had it in a perfect world, I'd actually prefer it to back test this at the open, the 224.17, bounce here, go and break that 225 if we want like a very bullish day for small caps. Now, I also told you guys about SoundHound, and I've been a very big SoundHound bull on this program. I've talked about it ad nauseum. It's still great. Yesterday, I gave you guys, or 2 days ago, was it yesterday? I said 1190 was a key area. Then I said yesterday on the program how important that 1265 area was. And you could see yesterday didn't really break it. You had that short break there while we were live, but didn't break it and actually closed on it. And the last time it closed on it the previous day, that 1190 area was just as important. It gapped up above, and we're actually seeing that right now in real time in the pre-market. So you're going to want to watch this 1265 level to hold today. If SoundHound does its normal market open thing where it gets a lot of volume, pops off, if it pushes to the upside, you are going to get, and I said this yesterday and I'll continue to say it, this is going to go more than likely to $15. It can go there today just because of how the OI is stacked on the options chain, as we talked about. This is hedged so heavily at 13. There's so much OI at 13, and the put side's pretty barren until 15. You got a little pit stop here at 14, but look at how many more calls there are comparatively to how many more puts there are until you get like sub 11. The bulls are heavy on this name. If this can hold over 13, my next key level to watch is 1371, then 1399 pushes you into the gap. So from a technical perspective, getting over 1399 pushes you into the gap. So from a TA perspective and from looking at the options chain alone and knowing what today is, you're going to go another dollar on this name. This is going to go to $15 today. My next price target after that 1399 tap is going to be 1597. That may be a stretch today, but OPEX tends to have wild days. And again, with how the chain is sitting right now, it is a very high likelihood that if that 13 level can break and hold, and if there is volume, those are big ifs, you need these things to be there, 15 is going to come today. I said it. Put a fork in it. We'll come back. We'll see what happens. Now, I still held those Joby puts, okay? And I took those on the program yesterday. They were risky. I went over the risk over and over and over again. They're right here, the $15 puts. It's still risky. Obviously, now it's a 0 DTE. And this trade, again, isn't really valid until it breaks at 1633. So if I don't see the 1633 break here into the open, then I'm more than likely going to walk on these with whatever I can get out of them. It's fine. But if it does break, it's same kind of story here. You're more than likely going to push to the downside pretty hard as the OI gets very heavy under 16 and you're losing, you're de-hedging, right? A lot of these calls here. Sub 17, over 17, there's a lot of bulls, but under 17, and really under 16 specifically, there's fewer bulls and more bears. So keep an eye on Joby today. And lastly, Oscar, I told you guys if it broke 1450 yesterday and could not recover it, this is more than likely going to get pinned near 13 this week. We saw it come down. We saw the bulls try real hard at 1415. They could not find their footing, and it is now sitting at 1399. So if you are long Oscar, based on how the chart's sitting right now, I would be cautious. My area to add, I'm looking down here between 1267 and 1320. Otherwise, I'm not touching this one unless 1450 can recover with a hell of a lot of volume, and I would not put it past that to not happen today, especially with how the daily, the weekly, and even the monthly are looking not fantastic. So I would stay away from this one right now. I think there's a good opportunity here. Let me make that abundantly clear. That opportunity just isn't right now. As we head into the market open, we've got 2 minutes left before the market opens. UVXY, and obviously for some reason, I don't know why, we got to look into this. My VIX isn't updating, but UVXY down at the market open. It's good to see. NVIDIA looking like it's going to open near all-time highs, which were made yesterday at 174.16, currently at 174. Microsoft had another new all-time high, looking to gap up again at 514.54. Earnings are coming up on the 30th, and this thing is just going. It might be setting up for a good stab on a short, just because of its asynchronous trade. Like the risk is a little nutty. Google not looking too bad here in the open, 185.65. We're almost to open right now. Apple pushing up barely, just up a little bit. Amazon up a little bit. Tesla, again, as I told you guys, unless you're scalping, wouldn't really touch it until Monday, if anything, and we'll go from there. And let's focus on the SPY as we head into market open. Then we'll pop around to those retail stocks when we get the time to do so after the market opens. So let's hang out here, guys. We got 30 more seconds until the market opens, and we'll see what fresh hell OPEX Day has brought to our doorstep. Brand new all-time high. It's only going to be it's not going to be anything but interesting today, in my opinion. That is the only possibility. We'll check out sectors here in a little bit too, so we'll go through the sectors, see where the strength and the weakness are, but I do want to watch the open here, and the market is open right now. All right. Soundhound pushing 13 right at the gate. Joby pushing near that 16.99 area. Keep an eye on Soundhound here. Oscar dropping. We'll see if Soundhound bulls can push it over 13. Like I said, once you get, and again, to be clear for that delta hedging point, you need to get a few cents over 13. They're not going to hedge if it's not over it because the risk isn't there yet. So as you push higher, it's going to add more fuel to the fire to push even higher. Joby puts are at 10 cents. I've got a 15-cent entry on them, so not the end of the world yet. And I know I would catch more Ivy at the open here, so if we do get a hard drop, which could get here, I'll look for my exit or at least a trim on that position. Soundhound here trying to push. Market, all things considered, obviously made a new all-time high at the open, but pretty flat. I know this looks like a scary candle, but it's pretty flat here into the open. Qs as well, pretty flat. Good morning, Nigam. I'm sorry if I keep saying your name wrong, but good morning. Thanks for stopping by. Keep an eye on Joby and Soundhound. Soundhound rejected the 13, coming back down. So if we don't see Soundhound bulls hold that 13 area, you're going to want to see them hold above, what was that area I had yesterday? I marked it out. Here we go. Dig it up. 1265 and 1278 should backtest, and actually we almost backtested it, 1279, so pretty close, not too bad. A lot of volatility here on those small retail names, and there's Oscar going to 1350. Like I said, right before the market opens, that's probably going to get pinned down there between 1350 and 13. It's the more likely scenario here with Oscar. Volatility at the open, flat. Nvidia obviously made another new all-time high, as did Microsoft. It's looking like we're getting a little bit of indecision here, just looking at our Mag 6, as I like to call them. Oh, there's Tesla with a hard push right out the gate. Yeah, SPY very, very, very flat. I'm saying it right? Okay, good. IWM gapped up, coming down a little bit. Remember, IWM was hot when we saw pre-market. That's what was looking good. So we're looking like we're getting a little bit of divergence here, possibly between the Qs and between IWM so far at the open. I'm going to probably give Joby to like 940, 945 and just see if it does get a death candle. It didn't gap up today. So if there is a trend reversal, it's definitely coming soon, but I don't like to bet on soon, and now I have a 0-day put. So obviously these are going to lose value very quickly. As they are very out the money, but IV is going to climb on this, so I know I can possibly still have some shekels to get out of that. Yeah, very flat day so far. Very flat open for an OPEX. Oscar's got some crazy volatility so far. Nvidia flat, Microsoft flat, Google pretty flat. It's looking like Tesla was the big one. Get that big pop out of the open. Pretty tame is the word I want to use. The way that the market's sitting, I'm a little like, I love that new all-time high yesterday. And again, if you watch the program, we made money on it, right? We got those 626 calls yesterday, made at least 100% on those. It's looking a little like we need to get, there's an argument both ways. I could see an argument both ways on the daily chart for the Bulls and the Bears, and that's not the environment I'd like to live in. So I try to take it day by day by day, and that's kind of how we got to go at this point in time. I don't love a gap up on an OPEX day, and I'm not loving the first 5-minute candle here as a bull, but it doesn't mean it's dead by any means at all. And by dead, I mean the market being bearish today. Soundhound's chilling around that 13-ish area. I'd watch the high a day for confirmation. If we break that high a day, you're probably going to see a big volume pop on Soundhound as we see market makers start to delta hedge for those 13 calls, which are 18K. How much are they? 17,000 OI on those 13 calls. Like I said, the put side's barren. So if it can break 13, you're going to see a big unloading and unwinding of puts and a big stacking up of calls. That is so important today. Very, 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 very important. Same thing with Joby south of like 17, and that might trigger at 1633. Let's look at our sectors here, because we're looking at a very, kind of a muted open. So let's see if there's strength and weakness across the board. Utility showing a good amount of strength, up about 0.8%. Energy up about 0.6%. Consumer staples pretty flat. Tech is up about 0.3%. Nothing crazy there. Real estate flat. Materials flat. Industrials flat. Healthcare oddly flat. Normally healthcare is pretty bullish on a Friday, as are financials. Both are flat, and normally we see some bullishness come into specifically healthcare and financials on a Friday. We actually have a joke in our community over exclusive trading where it's Financial Fridays, it's Healthcare Fridays. Like, those are the companies that tend to perform very well on a Friday. And as of right now, they're down a little. Not down. They're only marginally green. So, to me, what this could indicate is that this could be a lagging sector on the day, and we could see a hard push here later on in the day, just from a trend thing, what we normally see on a Friday. So if the market is sitting kind of sideways right now and some strength comes into healthcare and financials, that could be enough to push it a little bit higher. Consumer discretionary is up a little bit, and comm services are 0.3. So overall, looking like a pretty neutral to bullish day. My concern is why utilities are up so much. Utilities are already up about 1%. And energy's up pretty good, moving down so far, which is good if you're a bull, but you don't want to see these top three green and other things red. That's indicative of risk-off behavior. So we're seeing a potential risk-off move here. The thing that's flying in the face of that is that the tech is still green. And none of these other sectors are really red, but they are pretty muted with the exception of consumer discretionary. So seeing so much strength in utilities and seeing so much strength in energy does make me a little more cautious today on the bull side of the trade in general. And as you can see on SPY, pretty neutral movement. I mean, this looks really bearish, it looks bad, but these are 1 minute candles, and this price action is about 50 cents. So it's not very wide. It looks worse than it is in terms of like physically looking at the candles on the chart. Soundhound back tested again. That's that 1278 area. Low a day is at 1275. So you're gonna want to see that area hold. Not the worst thing to get a back test. Joby here still down on the day. Did technically gap down, but still down about 3% here. If it can't move out of this range and push lower, obviously this is going to be a fried play, but it is what it is. Oscar not showing a lot of strength. How's our VIX? Is this going to update? This is not updating yet. Okay. Neither is that. UVXY flat to down so far. Down about 2% here. Watch 17. You probably... So again, this is why I like using UVXY, especially on an OPEX day. People are still hedging for volatility, right? Obviously, they can hedge for volatility via VIX, but you have them hedging through other volatility tools, UVXY, VXX. I like looking at UVXY because it's the one that most people refer to. So watching 17, like very silly, easy whole number levels, watching 17 for a break to the downside could lead for a little bit of a volatility decay on the day, which is what we'd want to see if you are a bull on the day. NVIDIA about at all-time highs again. Microsoft rejecting the new all-time highs, pushing lower for now. Google pretty flat so far. Apple has, as I've talked about on the program, is just kind of lackluster. It really is. It is just not... I just think there's better things to play. It's just not a... It's going nowhere quite fast, really. I like Amazon north of 224. In general, it does have earnings coming up, so you do want to keep that in the back of your head. I don't really think we're going to get a big volatility move today, to be fair. Unless we see, like I said, unless volatility can sink 17 hard, that UVXY sinks 17 hard, then I think we might get a hard push to the downside on volatility, upside on the market overall. So use that trigger very closely. Watch 17 on UVXY. Now, if 17 doesn't break, then I would expect a very muted day. It doesn't necessarily mean it would even be bearish. I just think it would be very sideways. It's nothing much going on there, in my opinion. Let's see. Yeah, SPY kind of sitting around here. I guess hindsight being 2020, I should have grabbed more, a little bit more time on Joby, but it was looking like it was going to make one of those parabolic moves down because it has a big parabolic move up. It's looking like it's going to move down. So today, even if we sit up here, I might actually open up a swing put, which is ultra rare for me, assuming it stays below yesterday's high. But we'll see how the market reacts today. We'll see. Soundhound sitting right at that key level, that 12, again, I said 1278, so a few pennies off here. We'll see if it can hold on to that. Yeah, SPY muted. It looks like it might be a boring day, unfortunately. We do have Michigan sentiment, though, at 10, and that could be enough to really shake things up on the entire day, honestly. It could. I would watch on IWM. I mean, basically this level. If this level goes, small caps are sprinting today. 225.72. Pretty certain of that. How it's sitting right now, I think it's more than likely it's going to float around here. But if Michigan sentiment can break that and be enough fuel to the rocket here to break that, it could be a really, really solid day. Now, if it breaks to the downside, especially if it breaks 224.17, we're going down back-to-back test that 223.32. So you could have a nice short opportunity there too. I would not front run it either which way, because as we're seeing on this open right now, and I'm glad that my joke is being received well about being about full porting 0 DTE contracts on Twitter. As you see right now, that would probably not work out very well. There's not very much spread here in terms of price action. It is pretty choppy here on the open. It's more than likely just kind of waiting to see what happens with Michigan sentiment at this point. So we will, I guess, wait and see. Or, you know what we'll do? We'll flip the script a little bit. I think I'll roll into my stock spotlight segment for you guys. And then we'll come back and do live trading if there is an opportunity. Because the way that's sitting right now, we're more than likely just going to kind of fart around here. The way this is looking. It looks like we're going to sit around here. And I don't want to just talk about the same thing because it's going to be looking like paint's drying. And honestly, I can make paint drying look really attractive. I can make it exhilarating. I can make it very fun. I'd just rather wouldn't. And I'd rather talk about something else that is more fun and more interesting. So I think that's what we're going to do. We'll do our stock spotlight segment. And we'll kind of go from there. So let me get that pulled up for you guys. Now, again, the stock spotlight segment, I picked one name for you guys. And it's a name that I'm pretty bullish on. So I already have exposure in, to be clear. And it's something that you guys may want to consider for your portfolio. And I'll give you a few reasons why and why not. Or risk and reward, good and bad. And you make your own decision. That's what I like about the stock spotlight. Highlighting one name. So let me record this just in case some of you want to look at it later. And I lost my shoe. Also, before I do that, the stream is sponsored by Polar. It's not, but hey, Polar, if you want to sponsor me, you know, you're a seltzer company and you don't have a single sponsor out there. I know I'm a tiny, tiny, tiny fish, but if you want to just give me a case of Polar for free, I'll plug it. It's good seltzer. I'm just saying. I'll take a 12-pack. It's $3. You want to ship it to me? Just showing the effort. Give me a little shirt. Could be fun. You could be the seltzer of finance. You're getting in on the ground floor here, right? I've got under 100 people watching. The ground floor. Think about it, Polar. I know you're watching, Polar CEO. I know you're watching this program. You're one of the under 100 people that are here. Okay, now that my whistle has been wetted. Ugh, hated saying that. Let's get into this. All right, so this is the stock spotlight segment, and on this segment, we're talking about one name that could be a name that you may want to consider for your portfolio. Now, it's a name that I'm personally already exposed to, so I have a little bit of a bias, but I am going to list some bull points, some bear points, and the overall risk of this position. Now, this stock is going to be ticker symbol GRAB, Grab Holdings Limited. You may have heard of this one. It got some retail hype a little while back, but now is where I actually opened up a long, somewhere in the low fives. I'm long via equity and also leaps, and I'm going to tell you why. So in case you don't know what Grab is, let me give you a little oversight, and we'll go from there. So Grab essentially is Southeast Asia's super app, right? They offer a full suite of services, ride-hailing, food delivery, groceries, e-payments, lending, insurance, so banking, across 8 different companies. Those companies primarily Singapore, Malaysia, Indonesia, Philippines, Thailand, and Vietnam. Now in 2024, it processed approximately $18 billion in mobility and delivery services, and its financial services grew from 64% year over year, which is showing a lot of strength in their rideshare app portion of their business. So that was a quick little overview, and obviously you see me reading some notes. I don't have this memorized, so stick with me here. But I do have 5 bullet points for you, 3 bear points, so we'll kind of go over that. We'll look at the chart, and we'll talk about where it could go, either which way. So 5 bullet points on Grab. Basically, right now, my biggest bullet point on it is earnings inflection and their positive free cash flow. So They just turned their EBITDA positive in 2024 with 313 million in EBITDA and 136 million in free cash flow, which is a start of showing some solid indicators of financial strength. So this is more of a growth company, but when they start to show these signs of actually bringing in money and starting to retain money and having free cash flow, which is very important, that is the point where the wheel starts to turn and they actually start to grow and be more sustainable on their own versus taking out loans, issuing offerings, diluting, however else they can generate income to at least get the ball rolling. They've had user growth and ecosystem momentum. So looking at their monthly transaction users, they've increased 18% year over year. And they actually also have a subscription program, which I'm interested in because I think subscription programs, if you're not subscribed to things that you're watching right now, you're probably not existing, because it is almost impossible to live in a first world country or maybe even a third world country and not have a subscription to something. And it is the way of the future to make money, because I'm sure some of you are paying for Netflix and don't even use it, or paying for some stupid $5 subscription and don't even use it. And that is actually very attractive to me from an investment standpoint, because it's a way for free money essentially. And they have the Grab Unlimited subscription, which helps drive more frequency to people to use their platform. Think of like how people use DoorDash and they have the DoorDash Pass or whatever. That's more likely to use that because they're like, hey, I'm paying for this thing. I get a discount anyway. I might as well use it. Same kind of thing here. Helps with the retention and also obviously cross-selling opportunities, having that Grab Unlimited subscription. They also have some regional dominance and network effects. So this is actually a huge plus for them. Building infrastructure for any business, think Amazon, any Walmart, any of these big conglomerates, right? They need the infrastructure there to run their business. They may have a fantastic idea, but the infrastructure doesn't exist. They can't make any money. And these guys have it. So they lead the market in Asia specifically by a pretty wide margin. They are 4 times larger than the next leading ride-hailing app competitor, and about 2.5 to 3 times larger in food delivery. So they're showing dominance, strong market dominance in this, what is a very big growing economy, especially if they move into areas like China eventually, or India, where there's a ton of people and they're operating in the right area. That is a massive, massive opportunity. Last 2 points. They're having pretty quick fintech expansion. So their financial arm, so remember they also do banking and insurance as well. Their digital banking and lending is growing at least, or roughly, 64% year over year revenue from a $250 million base. What's cool about this is we're seeing adaptation also improve. So people are adopting to using Grab's products, because we're seeing 36% year over year growth in deposits in banks. So people are trusting this company to leave their money with them, and they're actually increasing their deposits with the bank. Which is a really strong sign of consumer confidence. They're using the app, they're putting more money into it because they plan on using it even more and more. Lastly, they have a decently strong liquidity and balance sheet. Now, I say decently because all things considered, it's still like a growth company, right? They basically, at this point in time, have about $6 billion in cash and short-term investments, which gives a lot of flexibility. And for me as a shareholder, minimizes my risk of potentially getting diluted via an offering, which is what you always want to look out for with these kinds of names that are growth companies, because they need to have money to survive. They might look at you and go, hey, you're a piggy bank, give me more money via an offering. And in general, their debt is fairly low, which is a great thing to see. So for a growth company to have pretty low debt and to sit on a decent amount of cash, that's very important. It's so important that recently they launched that $5 million buyback program. So they're buying their own shares at this price. Why shouldn't you? Just saying. They're showing confidence in their company. They're buying it back because they think it's undervalued, which is probably the best reason to buy, or one of the best reasons to buy a company. If the insiders look at a company and they buy more shares, they're doing that for one reason, because it's undervalued. Why do people sell? Many reasons. You're buying a house, you're having a child, whatever. You need liquidity, you need money, you sell stock, right? But why do you buy? Well, you buy because you think it's going to appreciate in value. You don't buy to lose money. No one buys equity to lose money, and they're buying equity, which is always a bullish thing to look at. A little bonus, they have some AI-powered tools, so that's kind of newish. It's rolling out. That could help with user experiences. That could help expand their margin a little bit. They could also lower their overhead, depending on how they're using those AI tools. They could reduce labor somehow. So that's something you want to just keep an eye on. that could be a catalyst. So if you're someone who likes an AI play, I'm not saying this is an AI play, but something that could be an AI play in the future, or at least AI implementation. Now, I did say I'd show you guys some risk factors. So I have 3 risk factors that I came up with for Grab. The first one being the premium of their evaluation. So currently at stock price at $5.36, it's moved up pretty decently the last few days, actually. It's trading roughly to 7 to 8% forward sales, which is a little lofty. It really depends on what you're looking at. And this is uncommon for growth companies. The risk here with that is that when earnings come out, if there's earnings misses or the growth takes a dip, specifically the growth, because people ignore forward sales and they ignore current ratios and stuff like that for growth, because growth is potential and the market's forward looking, right? If growth slips, then it may take a hard hit. So you got to keep that in the back of your head as a pretty decent risk factor, all things considered. But that's no different than any other growth company out there right now. That is a pretty common thing when evaluations get lofty for these kinds of growth companies. Now, the other, 2 more risk factors, regulatory and competition headwinds. Like I said before, they have a pretty strong grasp on market share right now. So I'm not too worried personally about competition headwinds. But it is something to consider, especially if we see other rideshare apps or other food delivery apps or whatever that are established, a la an Uber or a Dash Pass or whatever, move into those markets. That could be a risk. It could also be a benefit because those companies could maybe buy out Grab. Maybe they don't want to go through all the effort and they just want to buy Grab. Maybe they do that too. Food for thought. But they do currently have a merger going on with GoTo. It's another like delivery app that primarily operates in Indonesia. So that merger is baked into the price right now. The market's expecting the merger to go through. If there's delays in the merger or certain conditions pop up to delay Grab's expansion or the ability to expand with GoTo and actually get the merger done, or the acquisition, I should say, that could harm growth. And remember what I just said about growth? Growth is a major catalyst for this company, so that could be a major risk factor because that could impact the ability for this company to grow. Lastly, and most importantly, it really depends on their execution. So it really depends on if you trust the CEO, if you trust the company's vision, all that kind of thing, which is a personal decision you have to make. If you move beyond profitability with EBITDA, they are not at the point where they're making GAAP profitability. So the difference between EBITDA profitability and GAAP profitability is very big. So GAAP is accounting based, EBITDA is not. EBITDA shows your earnings before income tax, depreciation, and I forgot the A. And GAAP is showing your earnings after all that, right? So it's showing the ability that your company can make money after we take out every other bill, essentially. Think of it as like your net profit, right? So, gross profit and net profit. Think of your GAAP as your net profit to make it very simple to think of. So I guess it's more about, do you believe that they can turn a net profit, long term? Currently, obviously, it remains a challenge. As I said, they're a growth company. But if they fail to deliver in this area, where so far they're on a pretty good track, they're looking like they're pretty good, but if they fail to deliver in this area, that could be a strong bear catalyst for this company. So ultimately, your bull case is going to be a continued EBITDA growth, because that EBITDA growth will eventually roll over into GAAP profitability, like we just talked about. They're a fintech company looking to scale, right? So they're going to look to grow, move into fresh new markets, new areas, which would give them obviously more money, more market share. And their current market dominance. They have a strong hold on their current market, right? They're bigger than their competition. Can they hold on to that? We will see. But for the bulls right now, that is something that you could look at as an area of confidence because of the fact that they have that market dominance where they currently are, which I like because it gives them the ability, when you're so comfortable, as long as you don't sleep on it, meaning you don't rest on your laurels is a good phrase to use. You don't forget about where you're so dominant. So let's just pretend they have 90% market domination in Indonesia. I don't know the exact number. Let's pretend it's 90%. And they go, okay, let's go attack India. But they ignore Indonesia and they also fail at India. So now their market domination in India their market share goes to 10% and they failed in India. Then you've got a losing proposition. So as they expand, you're going to want to watch those numbers to see if they can hold on to their current market share as they try to expand. That's going to be very important. And to summarize for your bear case, you could have regulatory delays with the merger, so that could be a risk. Competition is there. I'm personally not too worried about that, but again, it would be irresponsible if I didn't list that as a possibility. And finally, and then the most important piece is the failure to eventually deliver that gap profitability. So they're making money right now. Can they actually turn a net profit ultimately? That's what I would look at. So why don't we look at the chart and kind of see what I like about it from a technical standpoint. So technically speaking, and maybe a little rushing here, but I was watching this downtrend here on the weekly, on the daily, whatever you want to use, starting at 11:22, then it tapped again, 2:21, then again on 6/6, and it's currently breaking out on the week, which means you're not too late to the party. If you want to join the party, you may overpay a tiny bit, but overpaying is relative depending on what your price target is, which we'll talk about here in a second. But I was watching this downtrend for a break, and as I said, I got in around like low fives. I'm exposed long via 5.5 call leaps and also equity. Looking for this breakout, which it looks like we're going to have. Looking at the daily chart, you got decent MACD here, flipping green on higher volume on that break, which is very important. You do have earnings coming up on the 30th, so that's going to be a big catalyst, obviously, on if it's going to be a bullish or bearish thing. Earnings are always a crapshoot, so to speak. So anything can happen with earnings, anything can be said that can help or hinder the stock. So it is a risk factor there, so be mindful of that. But looking at the weekly and the monthly, this looks solid. You've got MACD flipping over again here, solid bull momentum with a 61 RSI, decent volume again on this break, which you want to see. You're above all your EMAs and MAs. You actually wick the EMA on the weekly, and you're breaking above that key level, this downtrend. Super, super, super important weekly candle. And today, especially, I personally want to see this candle close basically like this. Closes higher, great, but basically get a close like this on the week. Looking at the month too, which this is a little dirty because I got so many lines here. It's looking really, really good. Essentially, breaking 572, which you're about 30 cents off from the current price action. It's air. There's not much up here. You do have the red SAR also, and if you watch this program, you know I love the SAR indicator. And when a monthly SAR breaks, I love when that happens. So we do have the red monthly SAR here. That number currently is 558 on the month. So getting that break as well could lead to some more bullish upside on grab. Now, I do want to highlight that this is a bigger company. So don't look at this just because the stock price is low, that it is like a micro cap. It's going to move super quick. Could move quick. But this is actually a pretty big company, 22 billion, so not small by any means, but doesn't mean it can't appreciate very quickly, especially for a fintech company, right? Especially for one of these companies that focuses on, in general, fintech, it's a super app, so it's got its arms and tentacles and everything. These companies tend to have much, much higher evaluations just from a market cap standpoint. It wouldn't shock me to see this company within a year, and I'm going to say this conservatively, 50 to 100 billion. That would put the stock price roughly between $10 to $20, so big upside potential there on this name, at least in my opinion. Looking also at the monthly here, there's so much volume down here that your volume profile is non-existent. So the IPO for this company was around 1189. You're at 541. Obviously, when you get up here, you're going to hit some level of resistance, but that still leaves you a decent upside here. If you're looking at risk to reward in general, which let me turn all my doodles back on. If you're looking at risk to reward in general on this name, you could easily risk, even if you want to keep it simple, at like $5 as a stop. So 490-ish, if you want to give it a little bit more headroom. You're risking about a 50-cent drawdown, and ultimately, if you're shooting for 10, which is still below this IPO price, at least almost 100% markup. So your risk to reward in that scenario is about 5 to 1 on equity, right? Decent risk to reward, great chart. These are the plays I love to share with you guys because they offer fantastic risk to reward, especially if you're moving on equity or like a leap contract. Now, what I'm looking for most interestingly enough, I mentioned the top of that level, that 572. That is the localized high on the month here back in, what was that? 11/29/2024. So we haven't been to that level in almost 2 years. So breaking that is going to be massive for this name, and it is only 30 cents away as of today. Now, that isn't going to be without some risk and without some difficulty. It does have support, or I should say in this case resistance, at 552, that kilo at 572, and I would look for 591 for confirmation. So if you're one of the people who want to be a little bit more risk off, especially with earnings coming up, you may want to wait for a break of 591. If 591 goes, then this thing's rocket to Russia. It's going. we're moving. 661's next price target. After that, 764, 822, and then you're getting into the tens. Easy. This could be one of those names that you buy now with equity. And if we do get this 572 break and it melts through these levels, which I think it would move pretty quickly, and earnings coming up could be that catalyst. They could say fantastic things on their earnings call. This could be the kind of company where if you accumulate it now, for one of the smarter ones than me, accumulated down here in like the $2-3 area, that you could ride shares on this company for quite some time. I think there's a good chance for this company to grow quite a bit, especially in the area in which they operate. They could expand their market domination and moving into those other areas of the market, especially with them operating in Asia. They may eventually have tentacles to get into even India or China. China's a little hard, obviously, but India is a possibility, Middle East, etc. And there, like I said, there's not a lot of competition out there, so that's why I like this name. And you could sit on a name like this pretty comfortably, especially once it gets over 10, as like a longer term hold. So I do like this name quite a bit. Now, again, I know I sound very bullish because I am, but I also don't want to minimize the fact that this isn't without its risk. It is a growth company. It doesn't turn a profit, at least net profit, at this point in time. So that is risky in itself. But the risk to reward, as I highlighted here, at least looking at the technical levels, you're risking 5-1 on equity. Pretty solid. As long as you're making an educated decision. I love Grab for the long term. And if you love Grab, let me know in the comments down below what you like about the company, what you hate about the company. And if you like this video, don't forget to like, share, and subscribe. Thanks. All right, guys, what do we think about Grab? G-R-A-B. What do we think? What do we think? What do we think? Technicals line up beautifully. Background on the company, pretty solid. You couldn't ask for more, in my opinion. I really, really, really like the way this one's shaping out. I'd love to hear what you guys say in the comments. Hatchet Overlord. Amateurization. Yes, thank you. That is what it's called. So before, when I was doing the EBITDA thing, the A is oh my God, I can't say it. Amortization. Got it. That is what that is. No thoughts on Grab, guys? Anyone? Bueller? You know what we should do? We should go back and look at all the names I've shared on this program and see how they're doing. That would be fun. Let's do a quick little summary. Oh, wait. We just passed 10 o'clock. Let's check and see how Michigan sentiment went. Ooh. Not much of a reaction. Let's check out what the number came in at. 3.9 expected. 3.6 is what came in on the 5-year. The 1 year, 5 was expected. 4.4 came in. So a little bit of a miss. The market, not really, kind of a nothing burger reaction, honestly. Okay, these are the kind of OPEXs I hate because there's a strong chance of getting chopped up today. If you're a day trader specifically, with how this open is. Bears could push to the downside here on the Qs. Look at where IWM found support, though, just north of that LOI. If that LOI breaks, you could have a short opportunity there. How's our IV today? IV's a little elevated. So IV percentile tends to be 23%, currently sitting at 27 at the money. So IV's a little elevated, which I don't love because of the fact that we're not going anywhere. So you have a high probability of buying higher IV right now and getting IV crushed. That's not good if you're buying to open options. So keep that in the back of your mind if you are considering day trading this market right now. I would stick to individual names if you are going to trade today. It's looking like we're catching some bearishness here on the Qs, though, as I'm talking about it. Nvidia breaking lows. Google breaking lows. Apple and Microsoft trying to hold up the ship. Amazon breaking lows. Oh, Tesla, I got to change my chart. Tesla's just been rocking and rolling. Watch this 33189 for rejection on Tesla. Negum says, I picked up Grab at 480. Look at you, man. God bless. Good play. Now, I know I saw a lot of people talking about Grab. I don't know when, it was a month or two ago, and it was really, really hype, and I tend to stay away from that when it gets like, oh, everyone starts talking about it. But when we see a chart play out like this, where I got this downtrend, basically have like a big inverse head and shoulder here, then you got another kind of like inverse head and shouldery kind of look here, and you break the downtrend on higher volume, Your daily, your weekly, your monthly all look solid. And you're 30 cents away from a 2-year high. Those are good risk to reward trades I like taking. Especially on equity, I can chill. Beautiful. Soundhound went up to 13, rejected it again. And it's looking like we're catching some bearishness on Soundhound as the market is. Yeah. Ooh, here's IWM. Dare I? I'd have to make it quick. I'm looking at the 223 zeros on IWM. All right. I grabbed a few at 27 cents. Nothing crazy, pretty light. Because it's expensive today. I might grab a few more. Basically watching to see this level break and then pull down to that other LOI, that key 223.32 number, which is burned into my cranium at this point. I'll put it up here so you guys can see it. There it is. All right, I'm going to snag a few more. All right, I added a few more at 0.27. And I might do one last add. We'll see. If it backtests the 8 EMA, so this light blue line on my chart, I'll do another add. I'll probably target for an average around like 0.26, nothing crazy. But right now I'm long the 223 puts at 0.27. Again, just so you know, because I know YouTube has a delay, basically trying to play down to this 223.32. And looking to potentially add a few more on the 8 EMA tap here, which we might get. Here's the tap. All right, oops, don't mean to do that. All right. I added a few more here at 2.3. Let's tell the Discord. All right, my average is, a little better than I thought, 2.5. It's very rare I short the lows. It's very rare I short in general. But because of how this is looking right now, like I said, there is a chance to get chopped up. But if it doesn't look like, if the bulls recover here, probably in the next like 5 minutes, we get above this POC, that would be my sign to close out. Otherwise, I'm going to rock and roll with this. I don't want to short small caps today either. I would prefer if I would actually want to get blown out of this position. Give me a God candle, because I mean, I'm actually going to make more equity. I'm going to make more money on this being a losing trade on my long equity, because I'm long a lot of small caps. I'd make more money than I'd lose. So effectively, this is like a day trade quasi hedge. It's funny how that works. It's like, man, I'm betting against myself. Great. All right, nice wick there for the Bears. Gonna backtest this level here and probably put me right at break even. Currently trading at, there it is, 2.5. So now I'm back at my entry. And that's why I scaled in intentionally. I knew there was a chance we could pop back up because this was the first break of it. Could have just melted, but typically when I tap my LOIs, they don't break right away. And in this case, it's serving as a support. So me getting a put here, it's a little ballsy because I'm betting on the fact that this is actually gonna break when it should be acting as support. But if it does break, it should be a violent move to the downside. And like I said, I got room for about $1. And on these contracts, looking at the delta alone, that would be about 23 cents. So it would be about 100% gain roughly, depending on IV and all that other jazz. So that's good risk to reward for me. And only risking about like 40 cents to the upside maybe. So I'd rather take a put here. 1 minute looks short. However, looking at the 5, it's only melted all morning. Doesn't mean it can't keep melting. You might want to watch the 200 MA here as well, currently at 223.64. So might want to keep an eye on that. Could catch a bid there. Looking at the 3 and the 5, it looks like it could try to reverse here on this key level. So basically, if it doesn't fire down in the next like minute or two, I'll actually flip long. But it's looking like the bears have momentum. There it is. All right, going to trim some here on that IV. It's 20%. 30-cent exit, 25-cent entry. Small accounts, you can put a stop at 25 and chill. Never overstay your welcome with a 0 day. You're doing a 0 day, unless you're responsibly positioned to lose money. When you get a good gain, take it. Sometimes you wait months and weeks and years to make 10, 20% on equity or whatever. So are you really going to spit in the face of a 20% gain you made in 1, 2, 3, 4, 5 minutes? Seems foolish, right? Don't be foolish. And I guess I did it after all. The title of the stream is something about 0 DTE Friday. Guys, I did it. We did a 0 DTE. Woo! Oh, come on. Let's go. Nice little push here to the downside. 0.32. I'll look for 0.33 to 0.35 for my next trim. Bears have momentum here on the short term. Like I said, longer term, though, it could flip it over. You got some volume down here. Watch 2. I'm going to want to trim here very soon. Between 22365 and basically 2237 might catch a bid. So actually, I'm going to go runners here. Runners 36% gain. And I'm going to personally put a stop loss at break even. Nice and easy. Now, totally risk-free. Ta-da! 36% gain in 1, 2, 3, 4, 5, 6 minutes, 7 minutes or so. Nice. I didn't lie to myself, right? We looked at the 5-minute chart and said, some support could come in here. Maybe I don't want to be short, and look what's happening right now. Getting a little bit of a bounce. So I always tell the members of our community, don't lie to yourself. Don't pretend just because you're in a trade and you're saying it's going to go one way that it can't go the other. Don't ever lie to yourself. Now, there's still an opportunity that's going to pull here, but I'd rather realize a chunk of my position at 36% and have a little bit on the side in case it does go there, then hold on to the whole thing until it may hit here and then get blown out, which, again, I'd prefer in a perfect world that I do actually get blown out of this trade. Now, I've already made money, so I don't care, and I have a stop loss, and it's fine. I want this to go up today. I don't want to be short IWM. But the opportunity presented itself, and we took it. Nice volume here for the Bulls. You know what? Let's look at the 1 day, or the 3 day calls. I might grab some 226s for Monday. Keep an eye on the 226s for Monday. Not yet. But especially if we tap that 223, getting a little bit more time for a reversal. I think you're still going to at least get a mean reversion here and get back to this 224.17 area at some point. So if we do come down here and tap that, you could have an opportunity there for a long. In a perfect world, we pull down to here. I get out on most of my runners because that's basically the trade. That's what I wanted. I flip long and it bounces. That'd be in a perfect world. But that's not going to be without its risk. Now, we are looking pretty burnt out on most of our time frames here. Like, it's pretty burnt. But bears they're piling. They are not giving up. That Joby play, unfortunately, is probably fried. Womp womp. And Soundhound, all things considered, holding up pretty good. It's under that 1278 area, but it's not too bad considering the Russell's down pretty good right now. Or not pretty good, but it's moving down after its gap up. And it respected to the penny. Look at this. You were here yesterday. If you were here yesterday, you saw it. This line was on my chart. It's existed on my chart. Where's the low of day? 1265. Magic. It's exactly where the low of the day was, at 1265. All right, looking like we're getting a reversal here on IWM, which is good. Even though I'm short on a 0 day, I kind of want a reversal on IWM. I'm not going to be too mad at it. You know, I'll actually close in profit here. All right, all out. No longer in those 0 day puts. What do you guys think? Good trade, cool trade, quick 36%. Now, they could have just swept some liquidity here and could have got me, which is fine. I don't care. And it could drive lower, but at least you guys know my game plan here is if we do get that push lower, I do want to establish a long down there. Looking at how this is sitting right now, we're pretty burnt out, like I said, on the 1, on the 2, on the 3, on the 5, even on the 10. Pretty burnt out. In fact, there hasn't been one green 10-minute candle since the open. These are the opportunities I like to look for a long, but I would prefer to get down to here first. Ideally, right? If I'm being picky. Maybe I would I'd do like half size once we tap the 200 on the 5, which is 223.66. But also, when bears have this much momentum, I don't want to be stepping in front of a steamroller. You have a decent volume shelf right around the same price, from including yesterday's price action and pre-market and after hours. So you have a good volume shelf here as well. So that could indicate some level of a key level here from a volume perspective, taking into account yesterday. This area, literally what we're on right now. You know what? I'll take it. I'll go half size though. Maybe I'll do 225s. I'm debating if I'm going to do 225s or 226s. And I'm going to leave you guys with this too. So, you know, you do whatever you want. I'll wait another minute. There's no rush here. Maybe I'll wait another minute. New low. Like I said, this is the prime place I want a long. All right, I'm going to wait. Because, counter argument, this level breaking with high volume, you might catch, like I said, now we're on the 200 on the 5 minute. You might catch a bid here, but if we don't catch a bid here, you're breaking through a lot of key areas. Bears could just pile on. So it is a good place to take a stab at a long from a risk reward standpoint. But it's obviously like I'm alluding to, it's not without its risk here. I'm not going to touch it. You know what I'll do? I'll say my goodbyes to you guys. I'll grab lunch and I'll debate if I'm going to do anything. I've had a fantastic week. I hope you have too. Don't force anything. Remember, it's OPEX. It's a crazy day. You learned something today on the show. Hopefully you made a little bit of money. That's what we like to do here. Teach you new things. Try to make the brain grow a little bit, right? Show you how to make a little bit of money too. That's kind of keep it nice and simple, right? That's kind of the goal of the Atomcash angle. And guys, if you haven't already, please, before I take off, do me a favor, like and share the stream, drop a comment, say hi. I typically say hi back. I got the chat pulled up. And if you haven't already, pop over to YouTube and subscribe, because once we get to 500 subscribers, this will become a daily show over and over and over. So if you want to see my glorious, sun-shining, happy face every single day of your life, you have that ability if we get to 500 subscribers on YouTube. So please check that out. If you have a YouTube account, please go over and subscribe if you like the content. I appreciate your support greatly. And with that being said, I will leave you guys with this. Some say you need an edge to trade. Well, that's what I already messed up the outro. I had so much energy coming into today, and I am now crashing. It's been a very exhausting morning for me, but let's try it again. Oh, and by the way, I will see you guys next week. I will put out, it might be on Monday again, but I'll put out lineup of shows on either Sunday or Monday over on my X account or Twitter, whatever you want to call it. So check that out over there. Make sure you're following me there to get an update. And also those live streams, once that update will be made live on the YouTube, so you can see it live there when I'm going live as well. So wherever you're subscribed or whatever, you'll at least know on Sunday or Monday. Again, let's try this again. Drum roll. Okay. Some say you need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time. I will see you next week. Take care.
The time has passed, and that's a wrap.